In my morning note, I compared to what's going on right now in this market to 1987. There are things that are decidedly, though, opposite of 1987, right? Oil crashing now. It wasn't crashing then. We have very low interest rates. Interest rates were going through the roof back then. I want to bring in Alan Murray, President and CEO of Fortune Media Group. Alan, you remember the time very well. It was hard not to think of October 19th, Black Monday, particularly after Christmas Eve, Monday session, half a day of session. Market got destroyed. Do you see some parallels there?
Yeah, I think there are some parallels. And Charles, the thing to remember about 1987, as scary as it was, the market shuts down for a week. The economy continued to grow for several more years after that. So it wasn't a harbinger of the end of the economic expansion. It was just a stock market event. Now, we don't know yet how this one's going to turn out, but it could be similar.
It could be. So what do you make of it then? Because, then, we had Iran and Iraq firing missiles at our ships. We attacked an oil platform off of the coast of Iran that morning. The markets were already breaking down. And this how does this happen when some people believe the market is efficient? How does this happen in a so-called efficient market where it could be this wrong?
Well, some people may believe the market is efficient. I think you and I both know that the market gets overbought sometimes. You have periods, and particularly when you look at the extended period we had of unbelievably low interest rates, it was inevitable that you were going to see some excesses in the market, and they have to be corrected at some point. So there's some scary stuff going on in the world. I think the whole the resignation of General Mattis, all the events around that, the notion that the Treasury Secretary would call up CEOs and say, hey, do you have enough money on board? All of those things make people nervous. That's understandable. But the bottom line here is that excesses get built in the market, and they have to be washed out from time to time.
And, Alan, before you go, you brought us some news. Tell us about this big sale.
Yeah, it's very exciting. Look, I think one of the positive things going on in the media world these days is that you have people who've made a lot of money who think investing in media is a good thing to do. You look at Mark Benioff and Time, you look at Jeff Bezos and the Washington Post, Lorraine Powell Jobs and the Atlantic. In our case, it's a Thai billionaire, a man named Chachaval Jayaravanan, who was educated here in the U.S., got to know Fortune very well in those days, has seen what we're doing in China, believes in the brand, and wants to see us grow and become stronger. So we closed the deal on Friday. Very happy to have a new owner, and I think you're going to see big things out of Fortune in the years ahead.
Well, I'm going to say first and foremost, congratulations. And
Thank you.
I know what the answer will be, but can you reassure folks that Fortune will stay independent and not necessarily be a mouthpiece for the new owner?
Oh, absolutely. He's been very clear. He's a hands-off owner. He supports our editorial independence. He's going to give us the resources we need to grow and get stronger. So, yeah, no question about that. Fortune will continue to be an independent voice. We've been around for almost 89 years now. I think this assures us we'll make it strong to our 100th anniversary. I'll invite you, Charles.
Hey, Alan, I miss you, some of our old conversations. I'm glad to see you.
Yeah.
And congratulations again.
Thanks so much. Happy to be with you.
All right, see you soon.